Welcome back to Wealth Mavericks, the podcast where we help doctors unlock the secrets to building generational wealth. And today, we're talking about how to think more strategically about your charitable giving.
Giving as a family and talking about various charities and causes that are meaningful to each of us individually as well as a family.
It always comes back to just being intentional, doing things on purpose, having a vision, having a plan, and then we can help you actually execute on that plan. Welcome back to the podcast. We're so glad you're here. Today feels a little extra special because I'm joined by Terra Firma founder and CEO, Bob Wolf. Bob, it's been a while since you've been on the show. Welcome back.
It has. Thanks, Aaron. I'm excited to be back and appreciate the invite.
Of course. We know you've been busy doing what you do best, which is serving our members and helping grow Terra Firma. And of course, I want to take the opportunity to remind our listeners that if you've been missing Bob, he does still have his own YouTube channel, Asset Coach and Tax Strategist, where he posts every week. So if you've been missing Bob, you should go over there and hit subscribe. We will have Kenny share that in the show notes below so that you can get your weekly dose of Bob. But for now, we have him back here on Wealth Mavericks, and I'm excited to talk about our topic today. So many of the members we work with are incredibly generous people, giving to their churches, communities, and charities that are important to them. And most of them are not giving with the intention to get tax savings, but of course that comes along with it. And as you begin to earn more and give more, the conversation shifts toward how do you give? How do you be more intentional about the structure, the timing, and the strategy behind your generosity so that the dollars you're giving can go even further? So, Bob, I've been hearing you talk more and more with our members about these different options, and I'd love for you to talk through what do those options look like when it comes to structuring your giving in a different way? Where do we even start?
Yeah. So, let's start from the easiest way to give. In the way that has the least amount of compliance work to it, and documentation. And so I would say just your normal tithing, your normal giving to your church. What's interesting is most of the people that when we start going through this process of reviewing their tax returns, a lot of times their CPAs are just kind of gathering their information and putting it into the forms of the tax forms, and not really being thoughtful and mindful as to what that member or that individual, their client is doing. So let me give you an example. So most of our members donate to their church, a organization that they are actively involved in. Okay. If I'm a business owner, which I am, and I am donating to my church and I'm actively involved in my church, it's no different than if I were to donate to the local school and do marketing for the local school and the football program and boosters and that sort of stuff. And for my business to do those donations would be considered marketing. The same is true for your church. Especially if you have kids that go to the private school at the church and you're actively involved in that church. Technically, you are marketing your business because you're there with other people that attend the church. Inevitably, you find out and learn about each other and have business, and all of a sudden you have a church member who says, "Hey, you know what? Wow, I didn't know you did that. I'm in need of that service." And then all of a sudden you have a client. That is advertising and marketing. Though I am donating to my church, I am giving to my church and my time and talent, but also my financial resources. So as a business owner, what we tend to do is we donate as a business to our church. Now, my wife does some on the individual side as well, but the reason why we started doing this was because I started getting more and more clients from guys from the men's group that were like, "Oh, Bob, I didn't know you did that. I'm in real need." Now, all of them don't fit our primary member goal, right? They're not our doctor focus, right? But they're friends. And I'd love to be able to help them out. So I do some things on my own to help them out with the relationships that we have, and they kind of get the friend and family discount, if you will. But from my business perspective, we're donating to the church,
Hmm.
and it is considered a marketing deduction for our business. And so now, if you're not a business owner, if you are a W-2, it becomes a little more difficult because what are you marketing? It's yourself. So it's your itemized deduction, which is your Schedule A. Now, the reason why I started doing this was I started looking at the Schedule A, the itemized deduction. And I saw a lot of clients at the time putting more money into the donation, the charitable box, so they can get the itemized deduction. But the government already gives you a standard deduction. Married or single, they already give you free money as a deduction. So my comment is always, why outspend the government? They're going to give it to you. So if your taxes, state and local taxes, SALT, and your mortgage interest don't meet the itemized, then don't try to outspend the government. Now, as an individual, it's a lot harder, right? Because you don't have that marketing. So, but one of the strategies that we put in place for our members and why we focus in the target market that we focus on with physicians is because we want to set up a business. They're looking for income. They're looking for a passive income. They're looking for an active income. They're looking for a way to generate wealth and cash flow outside of their normal doctoring day-to-day work. So the same could be potentially true as long as the entity that is established is also in the business of trying to make money. So as you kind of go through this process, and so this is what we do as we go through the overall tax strategies and we kind of build out this process. When you're dealing with W-2s and you're trying to build a plan for W-2, you can't just snap your finger and voila, it happens.
Mm-hmm.
Versus on a business owner, there's more justifiable ways of handling that transaction of business and referrals, and like I explained. So that's the simplest way.
So does the same go for if you're donating? Yes, a lot of our members donate to church, but if they don't, but if they're donating to a charity on a regular basis, does the same principle apply?
It does, but what I like to say is as long as you're actively involved in that charity.
Okay.
If you're just giving to a charity to give to a charity because you're interested in what they do, but you don't want to be actively involved, then it's harder to justify that you're actively involved.
Okay.
It can't be really a marketing or advertising. There's no potential of you really getting anything in return per se. You may, but it's very passive.
So practically speaking here, I'm giving to my church every month. I own a business, an LLC, and I'm going to give that money anyway. I get the standard deduction as a married filing jointly of $29,000 a year.
Yeah.
So if I can give through my business instead, which I just learned this from you, it's kind of like double dipping, but you're giving the same amount of dollars. You're just giving it through your business because
yeah, absolutely. Now, and here's the thing, every step you take needs to be a legitimate step, right?
Yeah.
We're not trying to deceive. We're not trying to hide or cheat or anything like that. And so if you do have a business that, maybe you have your own logo, you have your own business card, and those are ways of marketing and advertising your services as well. Mm-hmm. So if you're donating to your church in the name of the church, in the name of your business to the church, then how can the IRS not say that you're not actively involved? It's very difficult, and they're not going to get into the weeds on that, by the way, just for everybody's purposes. You have to do something really bad for them to go into those types of weeds, but I also don't like weeds. Right. So it strangles the good growth of the plants that you're trying, the flowers you're trying to plant. I'm not a gardener. I'm just making this stuff up on the fly. So is it that obvious? Hopefully not.
No.
It is now. I just outed myself. So yes, you could. But again, there needs to be the potential of that particular other churchgoer receiving services from you.
Okay.
So does that make sense?
It does. Okay. So that's one way. Going beyond that now. People who are
Mhm,
giving well beyond the standard deduction,
mhm,
or whether or not they give through their
mhm.
business. Now they're in a point where, okay, I'm ready to give big, or I'm ready to think about future generations. Like they hear these different things like a foundation or a donor advised fund.
Yeah.
When is the point that the conversation shifts to this, and maybe talk us through some of those other options?
Yeah. So I think when the conversation starts getting into that environment is a lot of times is where you have assets that you've received a decent amount of appreciation. So a good example and most common would be stocks, right? In a brokerage account. And you have the opportunity to sell those stocks and reap that gain, but you'll end up having to, and all of our members are in a 20% capital gain bracket. So you'll have to pay taxes on that 20% of those gains, which some members that makes sense. And in their strategy, it makes sense. But there's also certain members where they're like, well, I'm going to give to my church anyways. So it would make sense for me to maybe utilize like a donor advised fund and shift those appreciable assets into a donor advised fund. Now, the nice thing about donor advised fund is that there's less compliance work to be done than a foundation, but more than just taking money out of your wallet and putting it into the dish while it gets passed around at church, right?
Mhm.
Or even just writing a check or transferring funds to a charity, right? That's easy. So there's a little more work here. Fidelity I know has a donor advised fund. There's a lot of them out there, and basically what it's like any kind of mutual fund, if you will. You're putting money into it. They have the structure, and then you get to go ahead and put money into the charities that are within that kind of donor advised fund, if you will. And they're pretty flexible. And so that's another option that tends to be more popular. That's more of, and I'm not going to try to guess how long that donor advised funds have been around. I am aware of them over the last 5 years or so, but
Mhm.
it doesn't mean that they didn't exist before that. It just, they became more important in the evolution of our business. We had to dive into more strategies for our
Mhm.
members, and all of a sudden it became became front of mind, so to speak.
Okay.
So
So if I know I want to give a certain amount of money anyway, and then I also have these gains that eventually I'm going to pay taxes on those,
yeah,
I can give from that and then not pay taxes on those gains.
correct.
But okay.
Yeah.
So then a foundation, this just sounds cool. Like, ooh, let's have a family
Right.
foundation. And that's big money moves and it feels
Yeah.
good. What are the realities of creating a foundation and when does it
Yeah.
make sense?
Yeah, I would say somebody who has a fair amount of assets. And what's a fair amount of assets? It really is based on their situation, right? I
Mhm.
mean, 5 or 6 properties, maybe they're paid for. They're all cash flowing. They have a $1 million plus portfolio and brokerage, retirement accounts, that sort of stuff. Their lifestyle is comfortable. They don't have a lot of expenses, but they're still making a decent income stream, cash flow stream. Then a foundation makes sense because essentially what you're doing, and I like the idea of a foundation with the mindset of how do I teach my family the mentality of giving? And when you set up a foundation, it's like setting up any other business entity. It is a formal, structured, legal entity, no different than a trust, an LLC, or, whatever. Okay. Now, there are certain rules. Like, for example, you can raise funds, you can transfer your own funds, you can raise funds from family members into the foundation, right? And it could be a deductible expense to them. And as you raise funds to this foundation, you're required to give away at least 5% a year of the value of what's in the foundation. That's it. Not 90%, not 50, 5.
Wow.
Now, this is a great strategy. This is something that's on our family goal this year. As a family, we're not necessarily at that financial level that I was sharing earlier. But this is more of a family business kind of strategy that I want to do. I know long term, this is something that we want to do over a period of time and evolve into and build. And so I would like my adult kids to be involved in this. So it's something that connects us as a family to always have meetings, to always be together and giving as a family to and talking about various charities and causes that are meaningful to each of us individually as well as a family. And so it's my way, my wife's way to kind of connect us together as they go off into adulthood. And it's not necessarily they're donating their funds, right? As you know, as a young adult and
Mm.
whether you're single or married, it's not like we're living high, right? It's
Right.
we're all going through the struggles of adulthood and figuring out this adulting process. Um, but it's great to be able to kind of build that foundation. And so that's what we're trying to do with regards to us building a foundation for our family. And they can each be employees, if you will, and be compensated for the work that they're doing in the foundation. So it's kind of a give take. So they can be compensated, maybe donate it back, or whatever the case may be. So, but there is a lot more compliance. There's a lot more documentation. It is a legal entity. It's a structured entity. But that's part of the reason why we're intrigued with it as well is so we can teach that next generation this
Mm.
process as well.
I love that. And I know I've had those conversations with quite a few of my members who have adult kids too. And it excites them very much, not just being able to learn these things for themselves, but be able to pass them on to their kids. And so what I'm hearing you say is that there is a lot of compliance. So, but if you're following the rules, which maybe we'll
Mhm.
talk about a little bit, but you can put money into this. There are tax benefits to that.
100%. Yep.
But then you don't actually have to give. I mean, you want to give some money away, but you don't actually have to give more than 5%, at least to start.
Yeah. Yeah. Yeah,
So
so you
how
can figure
often?
out your causes. You can figure out how do we want to. If you think about like a lot of these foundations that you hear about, like the ultra wealthy or whatever, they
Yeah.
have these foundations. Well, what they're doing is they're taking their personal wealth, shifting it into this foundation, getting the tax benefit, but also it gives them an opportunity to donate these dollars out, right?
Mm.
Well, for us, it would be the same. And so, but on a much smaller scale, but we could go raise, we could have family and friends donate to this and we can create different events. We can create a 5K. I know you like to exercise and run. You can create
Yeah.
the Aaron donation
The Bob
5K.
Wolf 5K. I'm
Right?
there.
I mean,
Wow.
right? I mean, you could do whatever you want to do and be able to those funds go there. People get so it just kind of gives you and you're running a business. It's just a charitable business essentially, right? So it's kind of cool and it's kind of exciting, but again, don't get me wrong. It would and will be a lot of work because it
Mhm.
is a business and it has to be ran as a business.
So we don't have to get too far into the weeds on this, but I know that we've gotten people's wheels turning. And I can think
Mhm.
of several members who are just
Yeah.
like eager for this
Yeah.
information. Like when you say you have to be compliant, of course, in membership, we can help you with the setup and the stuff
Mhm.
like that. But, for example, how often are you meeting? How often do you have to meet a year for a foundation?
Well, most entities, there are requirements. Because this is something that I feel like is a process to connect the family together. My recommendation and what we're doing is monthly.
Oh.
It doesn't have to be face to face. It could be over Zoom, right?
Hmm.
Everyone's going to be in different locations and different areas. But at least on a monthly basis, just like what we talk about with our members, right? We're doing meeting notes, corporate minutes,
Yeah.
documenting what we're doing. This would be no different. Now you could do more often. We have some friends that get together every Sunday evening as a family on Zoom, and they do prayers, they read Bible studies, that kind of stuff. This could be part of that as well. Hey, let's take 5-10 minutes, talk about the foundation. Do you guys want to come aboard? All that kind of stuff.
Mm.
It is something that I think is a different level of connectivity
Yeah.
that is a potential for people, and people just don't think about it because why would they? Right? Because
Yeah.
you always hear about these ultra wealthy who have
Yeah.
these foundations. Why, and how could I have that?
I love learning about these things, and I know our members do too. And I know we say all the time, like, we help you play the game the way the wealthy do. Like, just look at what they're doing. And if you can do it in your own life, why the heck not? So, okay, before we wrap up, what would you say is, if people are nowhere near that, but they are giving and they are making more money and they want to take steps in this direction, what's a step they can take to start being more intentional with their giving?
Yeah. I think it starts with, especially with our members in the 510 meetings with you and our coaches, and put this down as a goal and the intention of having a conversation, and what is your personal action item that you want to do with just you and your spouse, or you and your spouse. This is something you guys have talked about on occasion. How do we bring in the kids and start that conversation and kind of dialogue and say, hey, this is what, and this is the same thing I've done with my family. Right. I said, okay, family meeting, and here's my thoughts. Here's what I'd like to do. What you guys want to do this? Does this sound cool? Or are you guys like, no, right? No different than, hey, you guys want to go to Disneyland, or you guys want to go to the movies, right?
Yeah.
It is just a family conversation. And then, but it plants that seed, and every seed needs to be nurtured and watered and fertilized in order for it to grow. But if you don't plant the seed, it won't ever grow.
Yeah.
That would be the very first step that I would recommend for people to take. And then from there, it'll start building. And if you're a member, then I would highly recommend communicate with your coach, talk about putting this on your Freedom Roadmap goals, and allow this to be an intentional thing, so that when we're building out your financial plan, we're building out your tax plan, we're incorporating this as part of that overall plan as well. Then it really starts becoming alive, because now you have our whole organization backing you up in the same intention.
Thank you, Bob. It always comes back to just being intentional, doing things on purpose, having a vision, having a plan, and then we can help you actually execute on that plan.
Absolutely.
So, all right, Doc, if this episode sparked some questions for you, that's great. It means you're ready to start thinking about giving a little more thoughtfully. And however you do it, just do it. The goal is the same. Support the causes you care about in a way that's both meaningful and smart. And of course, if you need help doing that, that's what we're here for. So thank you again for listening. We hope you'll join us again next time. And until then, go be a wealth fabric.